What's
What's
going
up,
on,
team?
guys?
How we doing?
How we doing? How we doing? We got everybody in here, all the familiar faces.
What up, everybody?
All
How we
right.
doing? Hopefully, everybody's having a good St. Patrick's Day weekend.
We know you did.
I don't know how my voice got screwed up, but I was keeping it in the zoo pretty much all weekend, too.
What's going on? What's going on? So, Hot Potato, Algo, STV. They know what I've been doing and tinkering with the MACD values, right? And so, what we want to do is we're going to hold off on that for the sake of simplicity, because there's other things we feel like we need to harp on
Mhm.
uh, before we even get into that level of complexity.
Yeah, because if
Uh,
you guys look at it, it'll look good in certain spots, but then it's going to look weird in other spots. And I was like, we might just want to leave it for now. Just keep it simple for everybody so we don't overcomplicate anything.
yeah, yeah. Uh, let's see. All right. So let's see. Let's get right into it. I mean, let's really talk about Friday. Friday was a interesting trade day, which definitely highlighted one, the power of the traffic lights, but also highlighted something else, right? And it's not just about the entry; it's also the exit. So we're going to talk more about like the exit and things that you can do to assure that you're exiting. Basically, uh, an optimal exit, right?
Mhm.
So let's go ahead and just get this on over. And of course, that's not the screen I'm looking for. So let me go ahead and change that. This always happens. Okay. So we're here. All right, good. We got that screen. Let's minimize that. And then let's get you smaller here. All right. And let's expand this. All right. So, what we have been seeing, and I'm sure you guys have as well, and this is with the spy. Ideally, you're getting an entry here on this traffic light, but where is your best exit, right? Now, what we say is like, hey, don't be greedy, right? So the minute you have an indicator go ahead and go against you, you exit. So in this situation here, you already broke a level. So our site pretty much brought you below this level here.
Mhm.
Certainly did. Then the MACD says, hey, we're losing momentum here, right? The first light pink here, right? And so that could essentially be where you exit your position or you scale out, right? This is something that STV likes to do, right? Now, should you scale out at RSI break in the first print of pink on the MACD, you're still in a play.
Gabe, I
You
don't
are,
think those are 2452 18s. I think that's the other one.
well, this is the 245618.
Oh, yeah, I remember the 52.
Geez, 52.
We've
Guys,
been messing with this a bunch, team.
yeah, guys, were some hit save. All right, there you go.
There you go. Yeah, so when you're looking at this right here, guys, what I want you guys to view this as price is going in your favor, is that the MACD is going to be the first sign that you then need to start paying attention to an exit so this is going to be for those of you guys that aren't scaling out and using the stop loss strategy. Maybe you're just playing with one contract. And this is going to help a lot of you guys out a lot too. So if you look at this 3-minute traffic light to the downside here on SPY, the MACD goes from dark red to light red, meaning that it's starting to lose a little bit of that momentum. But the clear-cut sign that the trade is most likely going to be over is that RSI moving average break. So the first time that you see that MACD go from dark red to light red, you're starting to look at this and saying, okay, this trade has given me a lot. It could have given me a little bit more than I deserve. Now it's Hawkeyes on that RSI. As soon as you get that break of that moving average, really, really nice exit there. Now, you do end up missing that little bit of a drop there all the way back down, but it's also very possible that you guys could have gotten scared and sold at the level as you were coming back up. So you're able to capture the bulk of the move with this. And just in general, when you're looking at these moves come across, if you're not scaling out, this is going to help you guys so much with getting a solid exit.
Definitely getting a solid exit and or going ahead and saying, all right, we can go ahead and scale out as STV would do. But as you could see, during this run, you're still trending down. And what we say is when RSI is below 50, you're still in a downtrend, right? So this would be your first indication of like, all right, maybe time to scale out. But in this move, in the entirety of this move, you do not break midpoint up until the next traffic light here,
Mm-hmm.
right? So where would you go ahead and say, all right, well, it's time to identify another exit? Well, you could certainly identify that exit here at this level at 388.56. Now, this is something that STV and I talked about.
Mm-hmm.
So on the 3 minute, you're looking at this candle. This is 11:42, which closes at 11:40. It closes at 11:45, and then this candle begins, right? What you can technically do, guys, is go right to the 2 minute and see where that 2 minute printed its candle. Excuse me, its level.
The 2
And
minutes actually going to print the level slightly sooner.
slightly sooner. So you can see that at 11:42, right? This closes pretty much at 11:44 because it's a 2 minute candle. So that level prints. This level prints a minute before. If we go back to the 3 minute, right? A minute before this candle even closes here on the 3 minute. So you could essentially use the 2 minute levels to confirm, like, oh, okay, this is why it comes down to this level. This is why you get the RSI break above its moving average this time, right? We understand that there's a delay in level print at the 2 minute, but you can again look, excuse me, the 3 minute, but you can go ahead and look at the 2 minute to front run that, right? I would rather front run a level than front run an entry. I'll be honest. So you can certainly use that to your advantage. Okay. So here you go. In this play here, you make your entry. You see an RSI break above its moving average. This is when you scale out, right? You're still paying attention to the play, right? You see it's going down, never really clearly breaks 50 here on the RSI. You see a level print. That's when you close your position. Does that make
Mhm.
sense? STV, that
Yep.
makes sense, right?
Oh, yeah. Oh, yeah. Tabasco Dave makes a good point here, too. It's not about getting every single penny. The bulk of the move is good money. Exactly. If you guys are able to capture the bulk of that move, and again, if you're playing on the 3 minute here and you see a $2 move down in the SPY, you're up well over 20%. So when we think about this, we're trying to pinpoint some of these exits here, guys, to make sure that you guys have a little bit more like ammo in your arsenal to just say, okay, this is probably where the trades could end up like reversing and going the other way. And no, we would not be playing 0 days on the 3 minute. That's crazy. And hold on, let's talk about that though. That's a fucking wild statement. The Gabe, can you pull up Apple?
Let's go
This is
ahead and
why
do
you
that.
don't play 0 days on the 3 minute. Okay, so if you look at Apple right there, that's it's like that one. Yeah. The 1021 traffic light. If you get 0 days on that traffic light, so you'd actually be getting it on the next candle there after the traffic light prints, and you see that retrace all the way back up to the 13, you're down horrendously. So no, we're not playing 0 days on the 3 minute. That's crazy. The only time that I'll do it is on the 1 minute because the risk is so tight. And this is another thing too, guys. So Gabe and I were talking about this as well. With the Apple chart here, and especially on the 3 minute, and this when you get on these larger time frames, you have to be able to get a little bit more picky. Now with the 1 minute, you can if you're getting a little bit more time on your contracts and you hit a big 1 minute move, and you just see the traffic light and you slap it, you're going to be okay because the move back up to that 13 or the traffic light in the other direction is relatively small. On the 2 minute, it's even bigger. On the 3 minute, it's larger. On the 5 minute, it's even bigger than that. So what you guys need to understand is when you're trading with these traffic lights, if price is too far away from one of those EMAs, you have to wait for a retest. You have
Yes.
to. Because if you're not, you're basically gambling that you're going to, in chasing at that point too. You're just chasing it down. You guys will see me on the stream all day long. I will just not take trades because I view them as chasing. Can they play out? Yeah, absolutely they can. And you guys have seen them play out before. But the thing is over a long enough period of time, if you behave that way in the market, you're probably going to end up getting slapped. So you have to make sure that you're patient with those entries.
Patient with those entries. And again, like, all right, there's no surprise that I'm getting frustrated with a lot of you guys. Absolutely frustrated. And I'm entitled to be frustrated. After all, we created quite possibly the best trading system in modern era. And that's not an overstatement. I think I'm very, very, very confident on that. Right.
Mhm.
So let's go ahead and look at this. Does anywhere in our platform suggest we're playing a 0-day expiration? If we intend to play 0-day expiration, we would have that there for you.
Mm-hmm.
Right? If that data is not available to you, you should not be playing it.
Mm-hmm.
It's really, really simple. Really, really simple. It also proves out that some of you are wasting our fucking time here because we have an entire curriculum available to you. And if you watch the curriculum, you will see that we say explicitly to stay away from 0 days.
Mm-hmm.
Right? So again, a lot of you, and I can see it, and you guys can go back into Market Talk and just harp on them and scream at them, right? No 0 days.
Mm-hmm.
It's really, really that simple.
The reason that we say this, guys, is because you have to be so fucking careful with those that it's not worth it. You guys will see me and Gabe sometimes with a screenshot of a 0 day.
Yeah.
Do you know what percentage of that account of our account is in that? Less than 1.
Less than 1.
But people will then say, oh, I'm just going to go in and trade 10% of my account on a 0 day. And it works once for them. And they're going to be like, oh, this is great. And then they get slapped. We are here to protect you guys and make sure that you guys are able to trade with an element of safety and take as much risk off the table as physically possible. It's always going to benefit you more to get more time. You guys were seeing, I was day trading this week contracts that had like 2-3 months to expiration on the 5-minute. You don't need all that, like all those short time to expiration contracts.
You don't need it. Okay. Now, we're talking about master level stuff here.
Mm-hmm.
Right. And we've literally gave you ideal exit points and where you would possibly scale out. Right. Now let's go ahead and look at the next traffic light to the upside with Apple. You get a traffic light here, right? Where do you exit? Well, you could go ahead and exit here.
Mm-hmm.
Scale out. This candle here, you're scaling out. Mint green here on the histogram.
Mm-hmm.
You have a cross here on the RSI. You scale out, but here's the deal, right? RSI plus the moving average are above 50. Now you get this dump here, but the moving average is still above 50, of which you get RSI break above once again, right? Now, here's the thing. Me personally, guys, right? If I see a rejection off a level before I see a cross of the RSI, that's when I'm getting out completely.
Mm-hmm. Mm-hmm.
Right? Again, traffic light here. I see a big boom, boom candle here. That's an anomaly. That shouldn't be there. That's an irregular candle relative to all the other candles here. We hit a level. If you're unsure of this level, on the 3-minute, let's go ahead and see. That's 12:30. We can go and look at the 2-minute and find it at or about 12:30.
Mm-hmm.
Right? 12:32. Mind you, that candle is going to close at 12:33. It started at 12:30. It closes at 12:33. So by 12:32, the close of this candle, you've already identified this level well before it even printed on a 3-minute. This is where you would ideally exit. It's a monster move. Here is a monster move. Let's go ahead and measure this out. Traffic light to this level is a 62-cent move. Now, let's say you hold it to the next traffic light. That's a 41-cent move. So the level is an optimal exit. You see, that's why we say respect levels. And I understand the levels are a little more obvious on the 1 minute and maybe on the 5 minute, especially when I'm drawing out the blue pill lines for you guys. But if you are unsure of where you are on the chart, especially as you see this candle forming, go ahead, do a double layout, switch this to the 2. And I think that this is something that everybody should be doing, right? Now, I know it adds a level of complexity, but what this is doing is also helping you to identify the level on the 3 if you're playing on a 3 with the 1 here. Excuse me, with the 2. You see what's
That's a
happening
spy.
here? What was that?
You have Apple and SPY.
Well, let's change the SPY. Let's change this as Apple.
But yeah, you'll see it right there.
Yeah, you'll also see it here. So right there. On the 2 minute, you see it loud and clear, even though you're on the 3. This would
you'd even
be,
see it on the 1.
you could even see it on the 1. Right? But the 2 and the 3 are a little closer. So I guess you would validate the level a little more on the 2 versus the 1, right? Right? That's what you would do. I think that that's what everybody should be doing, especially when it comes to levels, right? You're just following along price action. You get a big boom boom with a call. The level prints here before it does on the 3. Go ahead and just exit your position. There's maximal gains there, right? There's someone to argue like, hey, I'm leaving on the money on the table. Well, in this situation, you're probably not, right?
And
So
it's,
essentially,
guys, you got to realize here too, it's not about leaving money on the table. It's about the money that you're realizing.
yeah,
So if you were looking at some of these trades here too, and you miss $1 or 2 of the move, but you were to secure $1 or $1.50, you still made money. That trade still probably got you 1% on your account. Guys, we're not here to try and capitalize fully on every single move. We're trying to hit the bulk of the moves. And even if you can't do that, as long as you are able to get out of those trades green, that is going to give you a solid foundation, confidence going into the trades, time in front of the screens, and it's going to enable you to essentially look at these charts in a little bit of a different way and play more of the long game, because we're not trying to get rich in a week, guys. We know that.
we're not. We're also going to highlight basically traffic light to traffic light because they are in fact profitable. But if you respect your exits, whether it be a break of RSI, so we get a break of RSI, so we're coming here, you get a break of RSI, that's a 94-cent move, right? Better than this move here. Still profitable, but better than this move.
Exactly.
Right? And we're not even accounting for theta here, where the value probably would damn near be break even. And you held for 32 bars. What's that? 90 minutes? 96 minutes?
It's a long time.
It's a long, long time. The optimal trade is here at 92 cents or here at $1.06. 92 cents, $1.06. I really don't give a shit about that difference. This difference here, I really do.
Exactly.
Right. So that's why we say, like, again, pay attention to your exits, whether it be, the RSI and the MACD agreeing, or if there's a level in the zone. If you don't see it in the 3 minute at that time, go to the 2 minute, open up a split screen, and you will see that.
Guys, I think what we can realize here is that when we bring out some of these new indicators, guys, or the traffic lights and the different types of strategies, you are always falling back on the basics.
Yes.
You see RSI break, MACD losing momentum, you're done. Even if the trade goes another $1 in your direction, who cares? I want you guys to think about it like this. In terms of probabilities, what is more likely to happen over the next, let's say, 30 minutes to an hour after you have the MACD losing its momentum and RSI breaking above its moving average or above or below or against the
It's going to go
position.
against you.
Odds are it's going to continue to go against you, and you will see that play out over 1, 2, 3, 4, 500 trades.
Yeah.
So if you think about what the most likely outcome is to happen, well, then it's super simple to just say, okay, well, I'm up 10% on this trade. Take it.
I'm up 10% on the trade. Take it. Yes. Now let me go ahead and do this here. Now, Tabasco Dave, not hot potato. You there? You think? Well, we got 8 minutes left, 9 minutes left. STV. You want to go ahead and talk about basically the averaging to sort of kind of like get the best entry?
Averaging in?
No. The averaging of the traffic light value, like where
Oh, we
we're
could do that. I think you were probably better at explaining that though.
okay. So I'm gonna do that. All right. So let me go ahead and change the settings here. So let me get this to custom so you guys could see it and hit OK. All right. So hot potato, what's up? All right. The genie. I want 2 additional fields here. Right. One field is going to be the traffic light EMA value. Okay.
Mhm.
So whatever the EMA value is here, you see.
So are you talking about the traffic light value, or are you talking about the EMA values?
Well, the traffic light EMA value,
Yes.
right? So okay, let me just so I can drive my point home here. Let me just change the colors a little bit here on the chart. All right. So let's go on over to settings here. Let's go to style. What we're gonna do is we're gonna give the 48 EMA, we're gonna make this orange. And then the 13 EMA, we're gonna make blue. All right, so here we go. What we're looking at, guys, is the blue value and the traffic light value, right?
Mhm.
That's what we're looking at. Okay. So Tabasco Dave, I'm not talking about averaging into trades. No, I'm not talking about that. So when we hover over the EMA value here, we see that value is 155.81, right? When we look at the other EMA value, we see that that's 155.82, right? Now, this is dynamic. So it's constantly moving while the candle is doing its thing, right? It's constantly moving. Ideally, what you want to do is enter when the EMA value of the blue line and the traffic light are equal. Ideally equal. So that's where in the genie here, we would like something that displays prominently the value of the EMA and the traffic light, right? So if you're anticipating to move to the traffic light, and I'm going to tell you why, I'm going to show you guys why this is important, and this is what you should be looking at, especially if you're anticipating a cross to the downside. Because here on this candle, we see that the traffic light value is 155.94, whereas the actual EMA value is 155.93,
Mhm.
right? So that means you could essentially front run the traffic light here, right? And then here is the rule and the most important rule about this, right? This is going to give you the best entry, but here's the most important rule about this. If at entry you get into the candle and that candle close, it's not giving you a traffic light. You close your position.
You're out.
You're done. That's it. It's really, really simple.
Mhm.
So if Hot Potato could go ahead and add those values underneath the traffic light segment, which highlights the value of the actual traffic light and the blue EMA here. So we know when you have that intersecting cross, so you guys could then go ahead and get it and get your entry. Right.
So what this can do, guys, is help you guys get some better entries. But what you have to realize, and this is where discipline comes in, If it doesn't follow through, you're done. Kill the trade.
Kill the trade.
So if you think about it like this too, and this is why, if our risk is a traffic light in the opposite direction, if you're entering this way, the traffic light in the other direction isn't happening because you never got the traffic light in your direction. So you actually don't have a level of risk. So what this analogy allows you to do is be very, 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 very tight with your risk. So it tightens up risk a little bit more, gives you a better entry potentially, and you can capture a little bit more of the move.
In this situation, because again is dynamic on the 3-minute, I'll show you guys this, right? And by virtue of me teaching you this, then you definitely have to respect your exits more, right? Because we're allowing you to get in at the exact moment as opposed to a candle close. Now, why are we doing this when we preach candle close on the 1-minute? The reason why we are doing this, ladies and gentlemen, is because on the 3-minute, the moves are way bigger, right? We could go ahead and measure this out. Even just this move here, I mean, that's a 42-cent move on this candle alone, right? So if you got the actual EMA cross or the traffic light somewhere midpoint in this candle, and you get a confirmation with a candle close, we could literally say that just coming straight down to the 200 EMA would give you a 56-cent move. Coming down to the bottom of this candle would give you a dollar move. Assuming that the values cross on this candle, gets you in halfway, this candle then confirms it, and then you're able to bring it down. And if you brought it down all the way to where RSI breaks and the moving average turns light pink, let's measure that move. What's that going to get you? It's $1.08. Can't be mad at that. What was that, STV?
I said it's pretty big.
Yeah, that's what she said. Right? You could also do this. Let's look at another example. We could look at NVIDIA here. And so you get this big, 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 like candle down. Right?
No, and BX, no, the fourth candle would not stop you out as you're entering the 13. Because what you're still doing, guys, is it's getting you a better entry closer to the traffic light. So what's happening is that if your entry is then closer to the actual traffic light confirming, your risk is tighter. So when it comes up and retests that 13, well, it's not traffic lighting to the upside. You got a better entry, and you're most likely going to have a tighter stop. So no, it wouldn't stop you out.
So I'm going to go ahead and highlight. This is NVIDIA. This is another great example, right? You take NVIDIA from the close of this traffic light, right? You get traffic, well, the close of this candle. I mean, that's a
pretty big move. Is that $3?
Yeah, $3.39 from. Okay, so where in this candle does it close, right? So here's the thing. If we look at this candle here, we can see that the traffic light value is 261.75, right? And the EMA value is 261.74. That is a 1 cent difference. But I want to show you guys, by the time you get to this candle here, the difference is now 2 cents. But it's no longer 75. It's freaking 62. That's 10 cents there, right? So if we manage to get somewhere in here with the next candle printing the traffic light, you come down to this level here. Now you're looking at almost like a $4 move. Or if we go all the way down to where we get RSI break in the first pink, that's a $3 move, where you could just literally just play it right down to the first level and you're making bank there. There's a lot of ways to play this, right? Now, you could then go ahead again, guys. You make that entry. You come on down. You find your level. That's where you scale out. And then you just hang out, right? As long as the moving average and the RSI never breaks above 50 and the MACD is still trending in your favor, right? You can then eventually find this level courtesy of the 2-minute,
Mhm.
right? You can find a level courtesy of the 2-minute. So what this is doing, guys, is forcing you to be a little more, I guess, surgical with your trades, right? We're showing you on the chart that there's no need to willy-nilly, right? And be stupid with it. You can literally be methodical and surgical with this, right? And assure that you have profitable days,
Mhm.
right? That's pretty much it, guys. That's our masterclass for today.
Mhm.
I hope you guys are able to make sense of this. And we can get that update from Hot Potato. That'd be great. Because now that also gives you that visual cue, like, oh, the numbers match, right? And when they match, maybe we can do like some color coding, right? So if we're waiting for a traffic light to the downside, we get a color match where both numbers print red. Or we get a color match when we're looking for a call or move to the upside, we get a color match where both numbers print green. And then you make an entry. Okay.
Mhm.
Again, if you don't get the traffic light print, you close your position, right? Nothing really lost there. You just close your position and then wait for a traffic light, and then you go about your merry way. But that this would get you in. Um, yeah, I think that having those values in the genie would definitely help.
Mhm. I
That's
agree.
it. All right. So, hot potato, if we can get that done, that'd be great. Because I know a lot of people don't want to look all the way up here in the top corner. You sort of kind of like get lost with the numbers here in the
The
top corner
values are
on the
kinda
chart.
confusing, there's so many of them.
Yeah. So if we can get that inside the genie, oh boy, oh boy, oh boy. You guys definitely level up.
Mhm.
Let's see.
Dr. Q, that type of problem doesn't have to do with the strategy. That's more so just getting fills. So you're going for the mid. If you can't, you're slowly stepping it around to see where you can get a fill. If not, you're not taking the trade. If they're gonna make you overpay for the trade and you feel like you're chasing it, you probably are.
Probably are. Yep. Gonna be another fun day tomorrow.
Mm-hmm. Dude, we have a big week. Powell on Wednesday. We're gonna have some fun. Phoenix is gonna have another good week.
Yeah. That's something we didn't get to harp on. I'll go ahead and maybe make a video on it. But essentially you could use the 3-minute traffic light as an entry
We talked about this too.
and the 1-minute MACD cross to get you out.
I'll tell you the time. It's the same, Gabe. It's the same way that we were looking at it before. It's the same exact time.
The same
So
exact
there's
time.
multiple ways to skin the cat, guys, but it's looking at that 1 minute MACD, looking at the time that it actually happens. It's the same time effectively as the MACD losing its momentum on the 3 and the RSI breaking its moving average on that SPY move to the downside. So it's effectively the same
Yeah.
by like a minute.
Yeah. Okay. All right, guys. That's it. I
I
hope you
think we're
learned
good.
something. And if you learned something, now you have a responsibility to keep the freaking the broader community in fucking check. Now you
Mhm.
don't have to share the strategy with them because you guys are masterclass and this is unique to them, to you guys. But please, 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 just keep those guys in check.
Harp on the basics. The basics again, what did we talk about really today that wasn't the basics, guys?
It's all basics.
Mhm.
Right. I want to just stop getting mad at you guys. And it's probably not you guys. It's just the broader community. I'm just like, Jesus fucking Christ. Like, why do I'm too old for this shit. Yeah. Anyways, peace.
Peace.